Hello and welcome to this session on the labour market beyond the pandemic. My name's Sam Windett. I'm the incoming Deputy Director at the Learning and Work Institute and joined by Duncan Melville, Chief Economist at Learning and Work, and Paul Vivand, Associate Director of Statistics and Analysis at the Learning and Work Institute. And we'll be running through some questions with them and interrogating some of the data, the latest available data up till today's date of recording, which is June the 23rd. So we're going to start looking at what effect the pandemic has had on jobs. Paul, run us through what effect this pandemic has had.
First of all, can we move on to the next one? There we go. First of all, the actual effect on employment has been relatively muted this time, but the effect on hours worked has been far greater. That's the difference is largely furlough. So people have stayed in work and been counted as staying in work, but they've not actually been working or not working as much. And the gold line here, or ochre, is the employment figures. It's showing that employment has fallen, but not by a lot. And then we have two figures for the hours figures. One is the quarterly figures, which was the smooth sort of orange line. And then we get a set of weekly figures, which the Office for National Statistics has kindly produced, which is showing weekly figures. They're a little bit volatile, but they're basically showing the enormous hit to the labour market in as the first lockdown happened, and a smaller hit as in the second and third lockdowns in as we went through into the beginning of this year, and then an improvement. The latest figures we've got here at the end, up to the end of April, so that's our 94% there. Next slide, please. And looking at the furlough figures, these are all the people who are in work but aren't actually working. So these are the people where the hours are not counted. There's a baseline figure, which is people who are on holiday, sick leave, maternity, paternity leave, and so on. So before the lockdown, we had a number of people, around about 2 million people who are in work but not actually working, something over 2 million. And that went over 8 million as we went into the first lockdown. The bottom line, bottom bar here, group, the dark line is those who've been away from their job for 3 months or more. So those are people who've not been working for 3 months or more. And those are, we think, are at the highest risk of being damaged and having difficulty in getting back into work in the future. And at the moment, the latest figure there in April is just under 1 million of those. And then on top of that, there are quite a lot of others, including those who started being furloughed in January, February, who aren't in those figures yet. So there's another couple of million on top of that of people who are not at work, but still counted as being in employment. So there's some other people who are counted as being in jobs but haven't been at work, and around about 1 million who haven't been at work for 3 months or more. Right. Next slide. But since over the time, we've been getting increased better data. So we're getting figures for vacancies. So the dark line here is the vacancies over the entire period of the pandemic, from February 2020 through to early June 2021. So some of the figures repeat themselves here. But yes, we're at record vacancy levels in these figures, but we don't have a long time. They only go back to 2018, but that's good. But to soak up all the people who need work, we're going to need record vacancies for quite a time. Some areas and some sectors are a lot better than that. Some are worse. But you can see there that that the vacancy figures look good. Slightly off the boil the last week, but we'll see what happens in the next weeks coming. Any questions on that?
That's really useful to see, Paul. And obviously, you know, it's those big overall figures, the millions, the hours lost that we've been hearing about, particularly from the government. But I suppose within that, not everybody's been impacted the same. Different groups have fared better or worse than other groups within the population. What about those who've been hard hit by the pandemic, Paul?
We have looked at that. Next one, please. So we've looked at those hours worked by a number of disadvantaged groups, as well as the yellowy gold line is the orange line is all. So that's these are not seasonally adjusted, so they're not quite the same as the overall figures we showed previously, which were seasonally adjusted. They come from the data. So our latest figure there, which is January to March, is 95.4% of January to March 2020. So that actually looks a little bit better, but some of that's seasonal. But some of the groups are doing rather better than expected. So age 50 to 69 is more or less in terms of hours worked, is more or less in line with the overall. Disabled people, compared to their Feb 2020 position, are actually doing slightly better than average. Of course, their employment rate gap was large in February 2020 and continues to be large, but compared to their Feb 2020 position, they haven't actually, they've come back in May 2020, they were a lot worse. So that's groups which have done relatively well. The ones which have done badly, lone parents, that's sort of the ready line. We haven't got a full set of data here, but where we have got them, they look to have done worse. People with low qualifications, and we've grouped all of those together here, and that's qualified below level 3. So that's a big group of people. Ethnic minorities and young people not in full-time education. All those groups have done a lot worse in hours terms than the overall position. So I don't think anybody's particularly surprised that those groups are there. In fact, the surprise possibly is that disabled people haven't done worse, and the older people seem to be doing reasonably well there on that particular measure. But what we haven't got there is the longer term position.
Yeah, so that they're all comparable, aren't they? As opposed to people doing sort of well, it's just sort of they're doing less worse, and some of them, those groups, very interesting about those sort of low qualified, and it'd be interesting at some point to break that down as well. But it's really interesting to see the different age groups and the different sort of disadvantaged groups there. So as you mentioned, Paul, so we know in previous recessions that long-term unemployment is the thing that's really been impacted, and the figures have risen substantially. What's it looking like on long-term unemployment now?
Perhaps this is where I can come in and talk about that. If you move on to the next slide, please. So we're already seeing a rise in long-term unemployment. both for young people and for adults. And this is clearly a problem that's going to persist into the future for a number of years. And history is very clear. It tells us that long-term unemployment, once it's gone up, is very difficult to get down, and that tackling long-term unemployment will require an appropriate policy response, which I would discuss later. But it's also worth pointing out in this context the point that Paul made previously about people who are employed but away from their job for an extended period. Now, we only have figures for below and above 3 months, and it'll be interesting if ONS could produce figures for 6 months plus and a year plus. But those groups are potentially people who've not been working, but it's as a form of potentially hidden long-term unemployment, who may suffer some similar scarring effects that we know affect people who are very long-term unemployed, and that could continue into the future, which sort of brings us on to the next set of questions about what might happen in the future. If we could move the slide along, please. Thank you. So these are forecasts for the unemployment rate from 3 prominent forecasters. So the Office for Budget Responsibility, the Bank of England, and the National Institute for Economic and Social Research. Plus, the Treasury do a survey of independent forecasters. So also the average from those forecasters. So forecasters shown here are for the last quarter of each year, with the exception of the National Institute, who only produce or only publish an annual average figure. And that explains that timing difference. It explains the difference you'll see in the path of unemployment under the different forecasters. The National Institute have 2022 being above 2021, but that's for the year as a whole, not for the last quarter. I think it's also interesting that the oldest forecast, which is the off OBR in March, is the most pessimistic. And I would expect they'll revise down their forecasts for unemployment when they do their next set of forecasts in the autumn or winter of this year. I think the point to note, a key point to note, is that while the unemployment rate has fallen slightly in recent months, it's expected to rise again from current levels as the furlough scheme is made less generous and ended in September, which is current government policy. Unemployment could be around 6% at the end of this year, but then the general expectation is that it will fall back, and that by the end of 2025, roughly 6 years after the start of the pandemic, the unemployment rate is expected to be back to close to pre-pandemic levels. And there is a question about whether that's slightly optimistic, which I'll talk about shortly. If we can move on to the next slide, please. Just one key point has to be made about forecasting, is that forecasting is always uncertain. And current circumstances, which are really very unique in recent economic history, that uncertainty is very large. And just to illustrate that, this is a Bank of England fan chart, and you can see the very wide range of outcomes that they posit could be possible around the inner most darker shaded area, which shows the expectation that they think is most likely. We could move on to the last slide, please. So just picking up on that point about whether the forecasts are being a little optimistic, the experience of the last two recessions is that it's taken some between 7 and 8 years for the unemployment rate to get back to its pre-crisis level. So it's possible the forecasts are being over-optimistic, but it very much depends on if they did forecast beyond the end of 2025, how much they'd forecast unemployment falling by in those couple of years. A point to note here is that the risk of unemployment turning into long-term unemployment is much higher in the 1980s and the early 90s than it has been our experience since the 2008 Great Recession. One very important reason for that is the move over time to more active policy by Public Employment Service, so Job Centre Plus and its predecessors of various names, and more generally from the employment support sector procured by government as well. So after 2008, Job Centre Plus and wider employment support sector were generally effective in helping people to get back into work quickly. So this points to what needs to happen this time round. So the government needs to ensure that appropriate levels of conditionality are in place so that people are actively searching for work, but also to ensure that sufficient levels of support are on offer so that the barriers that individuals face in returning to work are tackled. Outside of labour market policy, it's really important that fiscal policy supports the economy rather than choking off economic recovery. This is what happened in 2010 when the austerity programme kept unemployment higher for longer than it needed to be. And so rather than rushing into fiscal consolidation, that needs to wait until such time as the economy has recovered fully from the pandemic. And after all, at the moment, interest rates are so low that continuing to borrow money is, in historic terms, very cheap. So don't choke off the recovery, Mr. Sunak, please. Thank you.
Thank you very much, Duncan. And plenty of information from you, both you and Paul there, both on what we've been seeing, what we're in the middle of, and what is looking up till 2025. And very useful to see all those forecasts together and the levels of uncertainty, which will be what the government have in front of them as well. And as you say, sort of those active labour market policies are some of the things that have made the difference in more recent recessions on those impacts on long-term unemployment, which we know have such a strong negative impact on people and their health and career opportunities. So lots to think about there, and of course, you know, that labour market support, the support available could look different in different places, so there's a regional aspect to all of this as well. Thank you so much for that information and that data, and lots for everybody to think about from those today. Thank you very much, Paul, and thank you, Duncan, and I hope everybody's enjoyed that today. Thanks.
Thank you.